My name is Brett, as I said before. Welcome today for our webinar on South Australia, Western Australia, and Tasmania property market. We're just covering a bit of an update on the marketplace, who Connect is, and some examples of some property we've got. Actually, some we've just received about an hour ago. So yeah, we'll get started. So um, just. Okay. So who's Connect? So Connect is primarily a B2B property investment portal supplying turnkey tenant-ready investment property in all states apart from Northern Territory. And we work with hand-picked builders and developers who supply house and land packages. We don't provide investment advice. We're not an investment club. Cost people nothing to purchase via us. We're primarily a property supplier. That's basically all we do. So, however, we will be doing webinars like this when we're getting some new stock, new types of investment, a new property in different areas, and then we'll do a pre-release on the marketplace to inform all our advisors and partners of what we've got coming. Um, so we'll get cracking straight into Adelaide market. And it has changed a little bit over the past couple of weeks, obviously with the spring selling season, but primarily rental yields are just under about four for houses, and units and apartments are rising up to almost 6%. And that's a trend that we feel that is going to continue due to affordability constraints. Basic, what we're covering today is the basic vacancy rates, and you'll notice Adelaide and Hobart pretty closely tied together. And as far as Adelaide is concerned, this has been a trend since before COVID. So Adelaide has traditionally had a fairly under 1% vacancy rate for quite some time, and Hobart's tracking to be the same. And Brisbane, all the migration, that's the same feeling there too. So yeah, so we're just covering rental yields for houses against units. Primarily, that's affordability trend happening in most states of Australia, and vacancy rates in capital cities. So Adelaide to Hobart are pretty closely tied, and Brisbane, and that trend is something that's going to continue. Hotspots in Adelaide driven by growth. So Salisbury North area, which is north of Adelaide, Adelaide CBD, and another hotspot area is Murray Bridge. Murray Bridge has a lot of growth due to business, and it has a lot of vacant land earmarked for expansion. So we'll go through that a little bit later. So Adelaide, now the spring quarter has all but passed. The market has jumped up considerably during the last quarter, and that's affected our growth. So as opposed to growth, as opposed to the higher price, and we're nudging up to that $1 million mark at the moment to average house price. So even just in the last couple of months, we've gone from an 880 average up to 948 average, which has affected rental yields slightly due to price growth or rapid price growth, but we're still on forecast for 4%, even though we've probably just had 3% growth. And that's what it was just 2 weeks ago when we did this webinar. These were the figures. So, and that's primarily driven by the luxury end of the Australian of Adelaide housing market has been quite active over spring, but everything else is flat. There's been it's a dire shortage of listings. Agents are complaining there's no stock, and there hasn't been a lot of average Adelaide stock on the market during spring, which is a little bit different. The rental market critically, so we're still at under that 1%. Vacancy rates are quite low. We're on par with Perth, and that Sydney and Melbourne's we're way under there. So there is still a rental shortage, and there's still average weekly rent, so it's still quite affordable compared to those eastern states. So which has led to population growth. And really, that rental yield is still quite high, although it's dropped a little bit. It's still been nudging up that 4%, but units and smaller townhouses are nudging up to 5 and increasing. So, but you see that Northern Adelaide section of Elizabeth Downs has really still flat at about 5%. And the median house price has jumped up nearly 100K just in the last quarter, example. So, um, quite extraordinary, the valuation or growths in South Australia at the moment. Still tracking, so their forward estimates for next year are mixed. So NAB's predicting 4, Commonwealth Bank's predicting 5% growth, but then SQM Research is underlying almost 10 in some areas. So, and that would be due to the areas on the bottom here. So Southwark, which is a new inner west development, 1,300 new houses. That's a government development. Um, and that's going to have some significant growth. And also Murray Bridge. Murray Bridge is 17,000 homes long term. And that obviously leads to tenant demand there. So again, investment hotspots. So these are the latest figures compared to even just 3 weeks ago. And they're still tracking on that 5% mark. Gawler region. So with Northern Adelaide expanding so rapidly, we're starting to feel there's a bit of a shortage there, and divisions are pushing up further into towards Gawler. Gawler is just on the border of Barossa Valley, and there's a huge population growth expectation throughout the next year, and lots of master plan releases, etc. Evanston Gardens, which is just before Gawler. That's an area where there'll be some significant opportunities for us. And then, of course, you've got Murray Bridge. Murray Bridge, 55% population increase by 2040, which is extraordinary. And the reason being is that we're starting to get other food manufacturing companies into that space. So Thomas Foods, which is the largest abattoir in the Southern Hemisphere, is at Murray Bridge. After their abattoirs burnt down a few years ago, they decided to increase the size of that, consolidate everything into the one centre, and that's brought in some other food groups like Golden North, etc. And there's also some defence starting to move in, which is quite different. That normally goes into the north of Adelaide, but it's starting to move into Murray Bridge. And then there's this housing development here over the next 10 to 20 years growth. So Murray Bridge, we feel, has a lot of expansion. It's very minimal house supply at the moment. We can't get a vacant block almost there, so it has some significant growth for us. Gone through that. So again, the areas that we tend to focus on, some opportunity will be Adelaide CBD. I know there'll be a few apartment developments going on throughout the city. There hasn't been anything for about 3 years in the CBD. And now they're starting to ramp up significantly, that investment opportunity. Southwark, which is west of Adelaide, obviously Murray Bridge. Noarlunga is down south. Noarlunga still has 4.8 to 5% growth. Not a lot of stock, but we'll be seeing some master plan sites there in the next couple of years, and obviously Gawler, which we've been in through. Some of the package that we have, and these are quite affordable. So Manipara West, this is a little three-bedder, smaller land size, but quite in demand. Good rental return, $500 or $600 a week. Nice floor plan there. They're all turnkey, 2.7 ceiling heights, landscaping, footings done, fencing, even letterboxes all through there, split system air conditioning. And there are some upgrades that you can do, but it's quite a good layout, good investment package. In a small subdivision, so not a lot of blocks in there, plenty of open space. Yeah, quite a nice little development. So Adelaide, in the north, we tend to have smaller pockets of divisions. It's not lots of 100 or 200, it's lots of 10 and 20 and 30s at the moment. mainly because it's growing rapidly and a lot of the developments already been done. Um, so a nice little pocket there. Plenty of infrastructure, and this is areas that we all look for is schooling, shopping, recreation, um, and obviously the Coles, etc., and is already there. So it's not something that is being built into a new area. It's all the infrastructure is already there, transports straight into the city, etc. So um, quite a good spot. Now we get into Hobart. So Hobart is a new area for us. We've only been operating through there for a couple of months. But we're starting to get some different packages, which we'll go into in a minute. Similar vacancy rates to South Australia, under that 1%. Has had some extraordinary property growth in the last couple of years. Rental yields range from 3% up to 4, and these are pretty conservative. And the population growth is growing. And obviously, at the moment, we look at areas like Launceston and Hobart. Primarily, we're in that Hobart region, which obviously, being a capital city, has all the infrastructure already there. So, um, price growth is quite high. Market sentiment has been flat, and generally because there hasn't been any stock, and that's going to change in the next several months, including to us. Um, Rental growth, vacancies rates, as I said, they're even under 0.5% or under half of less than zero. So quite low, probably the lowest, one of the lowest in the country, as we said. But yields are nudging up to that one that's got here houses 5.5 generally. So um, yeah, so some investment hotspots. These are generally all around the Hobart areas. And you'll see here yields are at 4 or 5%. I think that's a little bit conservative in some instances, but and there's some different opportunities that we've got that nudge well past there. So um, the reason being, I guess, Hobart has seen some growth. It's been a bit of a sleeper in the marketplace for about a year. It's starting to ramp up, but things like the new stadium going through, which pricked up everybody's ears. Obviously, lifestyle and recreation. It's a beautiful state. Lots of tourism there, but also has that transport, which is being upgraded. Hobart International Airport's being upgraded again. Healthcare centres, obviously, in education, university, etc. Not everybody wants to move up to Queensland, and there are others that are looking at to move out of Victoria and go further south into Hobart. It's quite an easy sort of quick move. So, and as I said, some of the major infrastructure and development projects, obviously the new stadium, health sector expandability, transport, education, tourism, as always, and the economic outlook for Tasmania is looking quite good. So, a stable government at the moment. So price growth trends. So there's been some extraordinary growth since COVID, and we're finding now that it is sort of stabilising at about 4 or 5% at the moment. So it's probably a good time to invest. And demographics. So this is tenant demand, and really, um, it's got a good cross section of tenants. You've got young professionals moving in generally for their medical field, students, families, obviously with schooling, and interstate retirees. This is a bit of a big one. Not all of them want huge, big houses. They need smaller rental properties as well. So we've got a good mix there of tenants that demand some of these properties in Tassie. So um, specs of properties, as you can see here, that they're quite extensive on some of what we've got. And we have some different stock that we don't have anywhere else. So there's two on a block for a pretty reasonable price, and they're getting around the 450 to 500 a week rent. So it's quite a unique package. We don't have a lot of them, and they get snapped up pretty quick. So um, they're just smaller two-bedders and affordable. So um, small little divisions, again, similar to Adelaide. So in built-up areas, quite unique. but yeah, smaller divisions you find in Tasmania as well. So, and some nice countryside, good tourism support, which means employment's quite good, and some nice countryside there. Um, and now we have some new property that just come online with us, a new supplier. We're dealing with a builder direct. And these are the standard construction, so they're the normal brick or Hebel or what have you. You can see that one there, 625, very affordable. Rentals is about 600 to 620 a week. Um, nice floor plan, en suites, stainless steel appliances, reverse cycle air conditioning to all bedrooms, LED downlights, that sort of thing. So these are quite well spec'd. Probably suit the family tenant more so than retiree, and you can see there that the look and feel of that property is a bit more high end than the standard tenant sort of stuff. So pretty well spec'd. And you're probably going to find a family and a long-term tenant, something like that too. So as you can see there are all the specifications. So I'm really set up for that investor. So it's a turnkey product, landscaping, fencing, driveway, everything's included. So there's another one. Independent rental. So we try and get independent rental assessments on all our properties, done by local agents in the area that know the area. And something like the one we've just seen there, you're talking 600 to 620 a week. And second property that we've just got these this morning or yesterday, last night. So forgive me if I don't know too much about it as yet, but so this is what we call a dual key package. In total, it's about 5 bedrooms. It's 1,000 to 1,100 a week. And you see there down one side, you've got 3 bedrooms and the other side two. Um, Slightly larger blocks, same spec as the other one. You just got a larger house. So again, it's not your average cheap investor product at all. So, and you'll see there extensive spec. So dishwashers and stainless steel appliances, etc. So, um, yeah, so there's a little bit more about Hobart. So we've got some stats to give to our agents about what's happening, why Hobart is in demand, etc. It's had some good capital growth, settled down a little bit now, thankfully, but it is stable. But that rental income is still quite strong there. So um, obviously Hobart's down the bottom. We will be getting some opportunity in Launceston soon, hopefully. Um, and again, the process to hold a property is expression of interest form, finance pre-approval or comfort letter or completion funds, and then IDs. We're certainly getting set up for the AML, which is coming in June, but yeah, it's quite a simple process. Then we um, confirm availability and get contracts out to you as soon as we can. So again, small subdivisions, quite unique. So you're not going to get flooded with 50 investment properties in the one area. There's probably only 10 in that whole part there. And then then we get into WA. So WA obviously has had lots of noise in the last couple of years. It also has a housing shortfall. Primarily these areas, Tasmania, South Australia and Western Australia, the housing shortfalls are quite high because we're starting to get that migration where we didn't before. Adelaide's always had a population decrease up until COVID, I guess, or just before COVID. More people left Adelaide than turned up, and now we're getting those families and people that are coming back to South Australia. They've been living in Melbourne and Sydney. West Australia is having the same thing. So Western Australia's economy, as we all know, is quite strong. I think it's the only state without any debt, and it's mining, etc., is going, still going strong. There's a new gas plant that's just got approved after 10 years, starting again in WA. But opportunity is quite tight. So central Perth, there's not a lot of stock. Mandurah, we had a flood of stock available. That's just about dried up now. Um, but medium house prices compared to Sydney, for example, are still pretty affordable. So six, seven, 800. House packages up at nudge up to the eight if they're closer to Perth, but really, they're quite affordable compared to Sydney. Market outlook for 2025, 26, annual growth 20%, which is still high, but that's been the stable growth path for the last 3 years, and we can't see that dropping anytime soon. So, and actual average days on market 21 days. I think that's probably a bit blown out a little bit, but um, South Australia at the moment, houses are still selling in a week. Same at Perth, and house blocks or new properties selling relatively quickly. Sometimes when we get new stock, we read the email, and by the time we finished and hit send, it's already sold. So opportunities are quite rare in WA. Um, Rental performance pretty stable, 5% growth, similar to Adelaide. Units, there are not a lot of units in the Perth marketplace, but that's nudging up there too. And the tenant profile, similar to Tasmania, Adelaide, is you've got young families, you've got downsizers, students, etc. Not so much, but it's a broad mixture of tenants, which is always good for that to keep that rental yield up, and that demand is quite high. And there's your rental growth projections are still nudging up to that 6% on average. So obviously quite a good marketplace, as we all know. Um, Amenities, infrastructure. Obviously, a government without any debt's got lots of money to spend, and it's really a lifestyle recreation city. Public transport's quite good. Healthcare is quite good. Retail shopping obviously growing. Um, you see lots of marinas all along the coast. Actually, we're seeing a lot of new developments. I've got some sort of marina near there, so it's a real water lifestyle location, which is quite good. And then you've got major residential and infrastructure marina projects going on in WA. Development plans. So this is an area that we're focusing on, which is now north of Perth. It's got lots of land. It's pre-approved for growth and divisions, and it's really having lots of infrastructure money pumped into it. The Two Rocks area has almost 10,000 dwellings approved or earmarked for that spot, and it's getting lots of infrastructure and lots of population growth, which increases tenant demand. And the rental price growth there, the trajectory is higher than Perth, and does have that. It's had a little bit of a boom period, but now it's getting to be a bit more stable. But you're still getting it's got down the bottom here, 11% property growth, which is quite high and higher than, say, Melbourne or Sydney at the moment. So, and again, a real good mixture of tenant demand there. So, which is what you're looking for. It's not just one trend. If a new university expands or something, you get a lot of student tenants, and then it drops off. But now you're getting that broad mixture of young professionals, young families, and that retiree growth too, that want to retire up to the coast and probably need rental properties. Again, price growth. This is all repeating itself a bit. Sorry. Again, that rental performance quite high. And then we get into Two Rocks. So it's a bit of investment there. I'll just go through some. This is another little package that we got through yesterday. It's closer to Perth. It's a dual key. So one apartment above the other, already titled, ready to go. 95% complete. So good for self-managed super fund purchase, $1,000 a week rent. Your dual key floor plan there. Small, but it is close to Perth, so um, I haven't got Two Rocks yet. So we do have some packages coming up in Two Rocks, north of Perth, but we just don't quite have them as yet. So yeah, as you can see, a broad range of product in some different areas. And Yeah, so that's about it. Has anybody got any questions if you want to love a copy of the webinar? So yeah, I'll actually email this copy to each of you this time. So I'll cut out the repeating sections, but yeah, I'll get that to you so you can have a bit of a look if you've got any questions. And I'll also email you a link to have a chat to me further for a one-on-one session. So if you want to chat about what we've got coming up and the properties that we've got, or you want some further information on the certain demographics, Tasmania, I can see is going to be a hot area for us in the next 12 months, especially with some good product coming in there. So, any more questions at all? No. So as I said, to reserve the property, we need an expression of interest form filled, a copy of finance pre-approval, or completion fund. So if you're a super corp or something, self-managed super fund set up, that you can complete the transaction, and also a copy of ID, so which will be mandatory for all real estate transactions mid next year. No further questions. Email. Yeah, so I think that's about it. Thank you for attending. Have a great day. In the lead up to Christmas, looks like it's been pretty busy. So yeah, but as I said, if you've got any questions, just feel free to give us a call or email us.